about to go over here. So, the market's closed Friday, so tomorrow's the last day for options expiration. Keep that in mind. First thing I wanted to go over, I had put this trade on with Agilent Technologies. I had just gone long naked puts. Yesterday it sold off really quick, so I took some profits. If I look at my screen here, so the A, I sold to close my put position. In the end, it was about a 54% return, so I'll take it. So that's closed. I also put on this trade at the close yesterday. And I'm going to look for Cloudflare. So I basically just straddle here. So I'm anticipating it's going to be some type of move. I'm going to be reporting earnings on the 5th, May 5th. Let's go back to the chart here. So I'm anticipating that this stock on expiration is going to be either in this green area, north of 120, or just south of, let's call it 95. Today it did pop through. So I'm feeling pretty good about the trade. I'll tell you what I did here with net. I bought a put. I bought puts. These are the May 6th expiration. Strike price of 115. Bought them for 975. And then I have here the calls. I bought the calls May 6th, 115 strike. Bought them for 1075. So that's how you get that spread in there. PayPal. So PayPal this morning. PayPal. So I did the naked puts on PayPal, anticipating that it was going to be dropping down below this area of 103.58. Now this morning it did drop below it. There was news out the CFO, I think, is leaving to go to Walmart. So I took half off because they are reporting earnings. They'll be reporting, going over this. They'll be reporting on the 27th. So I have options that go up beyond that. So I took half off for a profit. I'm going to keep the other half, see how they do in earnings. Usually when the CFO is resigning and going into earnings season, it's not a great sign. So I'm willing to take that chance. So we still have PayPal on, but I took profits, half profits this morning. New watch list. Apollo. So Apollo, seems like this line here around $58 is pretty significant on the daily. It did break through. This is yesterday's decline on decent volume. Today seems to be recovering a little bit, but I'm going to see if it can come back up, retest this 58, and if it starts to stall here, I might take a downward bias. On the weekly, stock just looks broken, right? So major sell-off, broke through the 20, broke through the 50. I'd say the next major support line is maybe around 51 or so. So we'll see how this trades, and then we'll take action if we need to. Another one on the watch list. So PPG. PPG has been in a downtrend. Came up, it's been kind of hovering around here. This 135 has been resistance. It sold off hard yesterday on okay volume. It's recovering a little bit today, but this kind of breakout here, I'm going to see if maybe it can retest some of these moving averages up here, and I think it would kind of turn lower again, so I'll trade it to the downside. Watching on the weekly, this here level, so this is maybe 130-ish around here. This seems like pretty good support. You see, this was the previous resistance. It broke out on, well, here's decent volume. It broke out on decent volume. Again, broke through, support, and now kind of broke down. So The weekly is telling me that this stock is maybe entering a new downtrend. So that gives me confidence on the daily to go ahead and take a short position if it were to retest this area right here, maybe 134, 135 or so. Let's look at Dow Chemical. Dow Chemical has been, it's got on the daily, it's nice uptrend. It's got this channel going on. So it's right in the middle of the channel here, just about. Having a good day today. So I'm watching to see how this breaks. Definitely goes on the watch list. Not doing anything with it right now, but I do like this, the histogram, the MACD histogram is curling higher. You might come up and retest this area of the channel. On the weekly, I really like this cup formation. Maybe do a handle here, I don't know. I see overhead here at the whatever this line is. So this is like maybe 68 bucks or so. So I'm watching it. Could be interesting over time. Now let's talk about something that looks really good. So Ollie came on the watch list on this big breakout on good volume. It's come down, but it's continuing this run. I'm not doing anything with it yet because it has been in a downtrend, but this is appearing to me like this could be a break in the downtrend. So I'm going to wait and see where this comes back to, and if it comes back to maybe 47.50, 47-ish, whatever the case may be, and it shows some strength, I might be inclined to take a long bias on this. Also of note, the 20-day has crossed the 50-day to the upside, so maybe this downtrend is changing to an uptrend. Interesting. On the weekly, same thing. So this thing, kind of broke through with this downtrending line. Could hit some resistance up here at 60 or so. But that said, I really like this action. Good volume. Perhaps this downtrend is starting to change to an uptrend. I'm going to take a look at Pfizer. Pfizer's kind of a sleepy one here, but that said, there could be opportunity. I kind of like the way Pfizer's really coiling in here. Now they are reporting on May 3rd, so we have some time. Let's watch it. I might get involved before earnings if this thing really tightens up. Maybe I'll take a straddle, thinking it's going to break above or below this really tight range here, but it's on the watch list. I also like that this has been a major uptrend, right, from early 21. It's support around the 20-day, support here around the 20 week, 50 week. Come off a little bit now this week, but we'll see if it starts to curl higher. I might be inclined to take a long position. Two names I'm going to be removing from the watch list. So first one is Thermo Fisher. This one on the watch list with this breakout on good volume, but it completely fell apart. Didn't hold. I was thinking maybe this could have been an inverse head and shoulders play, but it was a false play. These inverse head and shoulders, a lot of times they're a false breakout, so you have to be very careful. So I'm taking TMO off the watch list for now, and we'll readdress it at a later point if the setup looks good. Weekly is same thing here. So on the weekly, you can see this major uptrend here. It hit its 50-week moving average and then bounced off hard. So I'm not crazy about going long, given the weekly, and also given on the daily that it just couldn't break through in a big way. I've lost interest in Thermo Fisher, so it's off the list. And AEM, I'm taking this one off the list. Meanwhile, so while the breakout looks good, it did break out here. It came down today. The MACD went positive. That's a good sign. The only problem is I tried to trade some options in it this morning, and it is just so rough to get these trades off. It's just not very liquid. So I could trade 1 or 2 contracts, but I'm looking to get off like 10 or 20 contracts, maybe 30 contracts, and it's just hard to get in, most likely hard to get out. So it's a liquidity issue, so I'm taking this one off the list. So let's go through some trades. Okay. First one is EPAM. Got to be organized here, guys. Got to have all your lists in place. So EPAM. So this was on the watch list. We know that it has very high exposure to Ukraine and Russian sectors. It sold off hard on the invasion, and it's kind of come up. I was kind of looking at this level, kind of touched it again, sold off. So I am anticipating, and they report earnings on the 5th, I'm anticipating that this is going to stall out. So what I did was I went naked puts on this at this level. At the so my level is 296.55. I'm anticipating that this thing is going to break down on earnings, prior to earnings, after earnings, whatever the case may be. So to go over this trade here, the EPAM, which is here. So I basically bought 5 May 20 contracts, puts. The strike price is $300. I paid $30.45 for them, which is kind of expensive, but I'm anticipating that this thing is going to come off. JPM. So JP Morgan reported this morning. Didn't come out too good, so the stock gapped down. I did a bullish spread here. So basically, I'm anticipating, and it's very short term, just by next week. So I'm anticipating by next week, JPM is going to be trading below 130.34. So there's my line. You see it gap down today. As long as it trades by next Friday, not tomorrow, but a week from this Friday, if it's trading below this line, 130-ish, I'll make some money with it. So to let you know what I did on the JPM, I basically sold the April 22nd calls, 130 strike for $1.46, and then I bought to protect my upside. Everything is about calculated risk, right? So I bought the calls April 22nd, 131 strike price for $1.12. So that spread will be mine to keep should JPM stay below this level in about a week and a day. TRA. So this is pretty ugly, right? So it's been in a downtrend. You can see here it hit, this is the daily, so it hit its 20-day, hit its 20-day, rode its 20-day down, come up here, hit its 20-day. Now it seems getting weaker. It's having a little bit of an update today, but I think this gap here is going to be a huge headwind for this company. It's in a downtrend. I'm anticipating that this stock is going to be trading below 35.80 by the time my options expire. So I just did a naked put. I'll tell you what I did here. So TRA, I bought the May 20s, $40 strike price for $4.20. I'm down in the position now because the stock is coming back. I'm looking at it. In fact, the whole market, and NASDAQ is up 1.8. S&P is up 1%. So a strong day. But that said, I do believe that this stock will be trading below my strike price plus premium when the time comes. Snap is another short position I took, or a put position I took. So here's Snap. A downtrend. Here's the gap down. Hit its 20, hit its 20 and 50. This is the daily. Hit its 20, hit its 20, kind of came down, came up here, retest the 50, 50. It's having a hard time. It's really just a bearish looking daily chart. So I decided to go ahead and write some puts on this. I'm anticipating that this stock will be trading below $30.85 by my expiration. take a look at my snap trade. So I bought the April 22nd puts. Now I did April 22nd because they are reporting on the 21st. So this is an earnings play. I'm thinking that just given this chart pattern and how sick this company looks on the daily, and they're reporting in the next couple of days, I'm thinking it's not going to be great. I could be wrong, but I have my upside protected as well, so we'll see what happens. But this is a pretty short-term trade, so I did the April 22nd. I bought the puts, $34 strike price, and I paid $3.15 for them. I'm down in the trade as of this morning, but like I said, we'll play it through. A couple of long positions that I took. I have T-Mobile. So this market, yeah, it's in a downtrend. We're in a correction. But that said, at some point in time, you're at least going to get a bounce higher. So I have to kind of keep the portfolio balanced. I want to keep some shorts in there. I want to keep some or downside bias. I want to keep some longs in there or some upside bias just to kind of capture the market move. So T-Mobile to me looks pretty good. This went on our watch list here, and it's come down. It retested this 20-day and its support, and it's kind of bouncing. It kind of bounced off it today. I kind of liked it to the upside, so I bought some calls on it. I'm going out pretty far with these on the T-Mobile. So I bought the June 17th expiration, the 135 strike calls for about $6.05. So if T-Mobile trades above 141.05 by the end of June, I'll be making money on this. So I'm just kind of looking out now beyond this correction that we're in. I need to put some longs in there, and if I had to do it this way, I mean, this is a pretty solid level here, and I like this action today. We'll see how the volume turns out. On the weekly, same thing. So you see on the weekly chart, the 20-week is crossing the 50-week to the upside, a good sign. I would say that this thing is kind of starting a new uptrend. Will it get up here by June? It could. I could see it testing new highs, or at least retesting the old highs at around 150. That'd be great. Last one I have is, so we had on our watch list Splunk, right? So this thing broke out of this channel on good volume, came in pretty quickly, and now today is having an awesome day. So it's bouncing off. It's through it bounced off its 50-day. It's through its 20-day. Take a look at the weekly. Little nerve-wracking here because I wrote the option so that way it's around 150. So this thing could come up here, could hit some resistance here, but there's a lot of momentum here on the weekly. So this thing might be starting a new uptrend. So I took a shot. What I did was I bought the June 17th calls, 140 strike price for $10.47. Pretty expensive, but if you take a look at this weekly, I think I have a good shot of this being north of this 150, being north of 150.47. So I need it up here by June. Could happen. This is my closing trades, my watch list, my new trades, what looks good, Ollie Pfizer. I removed TMO, AEM. All right, I'm done. Thanks.